All right, so we're getting a little bit excited because we're very close to understanding the strategy, building our own strategy, all that sort of stuff that is coming within this section of the course. But before any of that, stop getting excited. We need to understand risk management. Now, risk management is absolutely one of the hardest things when it comes to trading because of all the shit that floats around it. There's a lot of noise around risk management. Risk management itself is very simple, but there's a lot of psychology that goes into risk management. There's a lot of other emotions and stuff like that, stuff that we should be ignoring as traders. But it is, of course, important to understand risk management and know exactly how we should treat it and why it is so important. Firstly, having proper risk management is the difference between being able to keep your account alive or entirely blow the account, right? Now, as traders, we want to be passing funded accounts. We want to be gaining capital. We don't want to be throwing it all away to the markets. This market is already designed to beat you, right? It is incredibly hard to make money within this market, but with the concepts we've learned, the strategies we can put into place, there is a chance that we can make money and have an edge over the market. Only if we manage our risk can we be able to properly do this. So the way that you want to tackle risk is quite simply, you either want to be per day risking 1 to 3%. That is it. Now that might sound really, really little, and you might be thinking, are you serious? That's it? Only 1%, 2% of the account? That's crazy. But if you look at the S&P, investing in the S&P, I think it returns like 5 to 10% per year on average. You're going to be trading a lot more than twice to make 5%, right? That is crazy. Anyway, what you want to do is risk 1 to 3%. Why? Why do we want to be doing this? Well, we're not going to be winning every single trade, because otherwise, if we were, we'd be risking a lot. We want to be risking 1 to 2%, 1 to 3%, because let's say we have a $100 account, or no, it doesn't even matter what account we have. Let's say we have $1 million account, just to make it more exciting. That $1 million account, if we risk 1%, that would mean we would have to lose 100 trades in a row in order to completely blow that account. If it's a personal account, prop firms, a little bit different. But as a personal account, let's say we have $1 million, we risk 1% per day, we would have to lose 100 trades in a row to then blow the account, which, let's face it, that's pretty well impossible to do. If you risk 2%, you got to lose 50 trades in a row. Again, very, very unlikely that would happen. Then if you risk 3%, that is, again, whatever the heck the maths is for that. I don't even know. But by risking such a small amount, we are keeping our capital alive, which is way more important. You want to keep yourself alive to be able to trade another day. Now, of course, with our risk management, the main reason people over risk during their trades is because, you might be starting off with a $100 account in your balance, and then risking 1 to 2% is only $1 to $2. So it's not that much at all. So let's look at this in terms of taking an actual trade, right? We make 2% in the day. This is how you got to look at it. You may have that $100 account making 2%. That's only $2. You make that exact same trade, 2% profit on a $1,000 account. That's now $20, right? You make that same 2% trade, the exact same trade. You got to do nothing different on a $10,000 account, and you made $200, right? So you can see that by increasing the capital, the risk management does not have to change. The capital getting bigger is just going to reward you a lot nicer, all right? That is how the rich get richer, of course, because they put $1 million into something, it only has to go up 2%, and they make a lot more than you putting 1,000 into it and going up 2%, right? But apart from that, that is why we're using risk management. Now, obviously, you're going to be telling me that, well, that's ridiculous. Why I don't have $20,000 laying around just to make 2% on to be happy with. That is why prop firms are so good. But don't worry about the prop firms yet. We don't want to be trading with prop firms yet because of the risk rules that they have in place. But we'll be talking about that a lot later down in the line. So stay tuned for that. Do not look to enter a prop firm unless you want to do a test one. There is some like demo sort of prop firms where you don't actually pay for it and you like simulate through it. We don't need to worry about that yet. That's a lot later in the line. What I do want to say is that by getting a proper risk management for ourselves and understanding why, for me personally, look, I risk 2% a day and I only take one trade per day. That is it. 2% on a trade, that is me done for the day. I'm only ever taking one trade, only ever risking 2%. Why? Because I know that that's a certain amount that I'm going to lose, and I know that with my reward, I should be making X amount based on however far it wants to run. But by understanding the risk management and knowing that I only have to make 2% per day, that's fine. It might not seem like a lot when you're first starting, but the actual skill of trading is what is the money making glitch. It's not the big runners that you could potentially hit. It's not the 1 to 6 risk to reward, and it's like, yes, that's what I need to be doing. No, it's none of that. It is the actual skill of trading, which includes risk management. Now, the way that we want to attack this is, as beginners, we're not going to be making a lot of money. That's fine. Our goal is not to be making money for like the first 3 months at least. After that, you possibly can, but apart from that, we want to basically attack trading in a way as if we already have that ideal sort of account size, right? So we have $100 to our name and we're risking 2% per day. I'm risking $2, which doesn't sound like a lot because it's not. But ideally, in my head, I already have that 200K funded account, right? I'm trading with that. That is the mindset you've got to be going into this with. It helps a lot as well if you like switch your profit and loss, if you look at it just in percentages, because then you can convert it to other things. Don't look at it and be like, oh, I made $3.48 today, but that's actually 3.4% and it's actually a really good fucking day. So you got to look at it sort of like that as well. But risk management is not just what percentage we're risking per trade, it's also how many trades we're taking per day. So again, like I said, I'm only taking 1 trade per day, and that's what you should be doing as well. There's no point jumping around the markets trying to find little ins and outs. Oh, I'm going to go long in this bit, I'm going to go short in this bit. It's just too much. We don't need to be doing that. It's a lot more stress-free if you're finding 1 trade, you're executing it perfectly based on your plan, all of this, and then you get the result. Let me tell you a story. There was one time when I was trading and I was first learning to trade. This is probably like a month, 2 months into it. I was learning to trade and I was on YouTube and there was this guy who was live streaming him trading live, right? I'd watched a couple of his videos because I saw him and then he's living a lifestyle that, I'd like to live. So I was like, all right, this guy obviously knows how to trade. Let me jump on there. Let me see what's going on. So I jump on there with my account, which I've been risking not a lot on. I start watching this guy's live stream and he is not telling people exactly when he's entering the market or this, that, the other, but we can see his screens, we can see everything he's doing, just not the executions, right? So basically, I can't just copy him, and I'm watching this guy and he's saying, okay, market's open now, blah, 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 we're going through it. I'm trying to execute trades based on what he's talking about. He's executing trades, telling me that he's already up $3,000 for the day. He's just lost 1,000. He's made 500 back, blah, blah, blah. He's going in and out of the market, making money, losing a little bit, but making more, all of this. And basically, I'm trying to follow this and I'm losing my head. I'm losing trade after trade after trade. I'm hitting a long and then it's going short. All of that shit, literally, I blew maybe 25% of my account just while following that guy while he was live streaming. And then to make it worse, this guy goes around and basically just says, look at the market today. Like, literally, if you're not making money, you must be shit at this, because how can you not be making money in conditions like this? And I'm sat there going, what the fuck, man? I've lost 25% of my account. But there's got to be losers in the markets in order for the winners to be able to win. But yeah, that was my story. And that was just the day where I realized basically risk management has to be percentage and a certain amount of trades per day, because that is unsustainable if I was trying to trade that many times a day and losing it. Even if I was good at it, like, I probably would have been break even. I don't even know, but that's also way too much stress as well. I'm not trying to look for every little move, because then it's subjective as well. When should I be exiting the market? Stuff like that. There's just a lot going on if you're looking to trade like that. I mean, obviously some people can make it work like that guy, but for me, that's just well out of the picture. Okay, so risk management. Risking 1 to 3% per day. Choose whatever you want to do there. I choose 2%, me personally. And then we want to take 1 trade per day. That is it. That is our risk. We should only be looking for 1 trade per day. If you are to be entering into 2 trades in a day, for whatever reason, let's say you trade 2 different pairs and they're both setting up, halve your risk. So for me, I do 2%. If I have 2 trades setting up, like back in my past I used to, I would then put 1% risk on this one, 1% risk on that one. Yeah, just spread yourself out. It should be a daily risk, 2% for the day. That is what you're looking for. And yeah, stuff like that. and then trade in the mindset that you're already with that ideal account size. We are not looking to flip $100 into $4 million, right? Like some people on YouTube do. That possibly can be done. I mean, they're showing that it's doable. As beginner traders, we are not there yet. Those guys have been trading for years. They know what they're doing, and they're just fucking about with $100 and trying to flip it. It is not properly risked. It is not even following their proper risk management or their trading plan, anything like that, I can guarantee you. So with risk management, we've got to keep the emotions out of it and just understand that the 2% is what we're focused on, not the dollar figure. While we're starting, we are not focused on the dollar figure. We focus on the percentage. So risk management done. So important. Let's get into the next lesson. And this is where shit starts ramping up. So get excited.